All right, I think the DVR should work. If it doesn't work for you, you just may have to refresh the stream. So if you just refresh on your side, I think we should be good. But again, apologize for that craziness. Anyway, so we'll go ahead and get started. So good evening, everybody, and welcome back to Walks in Wall Street. Today is Monday, February 5th, 2024. It's about 9:02 p.m. Eastern Time here in New York City. Hopefully you all had a wonderful weekend. It is very cold, very frigid, and very windy night here in Manhattan. So I do apologize in advance for any wind noise. Now, there's a couple things that I want to talk about tonight. Obviously, last week, if we just do a little bit of a recap, it was a busy week. We had pretty much all of the main bulk of the corporate earnings from the Magnificent Seven companies, with the exception of a few. We heard from the likes of Microsoft, we heard from Alphabet, Apple, and Meta as they reported their corporate earnings, and earnings came in really solid, really well. We did a deep dive on those individual companies last week. We may touch on them yet again today, but we also heard from the Federal Reserve. The first FOMC meeting of the year took place on January 30th through the 31st, and Fed Chair Jerome Powell decided to leave interest rates unchanged. So the current Fed funds rate is still in a target range of 5.25% to 5.5%. And I'm not sure if anybody saw this, but if you haven't, I would go ahead and check this out. The Fed Chair, Jerome Powell, appeared on a 60 Minutes segment. He was being interviewed. He talked about the economy, he talked about inflation, and he gave a exclusive outlook on what him and the other Fed presidents think about the monetary policy environment going forward throughout 2024. Now, what was interesting to me, and we'll talk about this more, is the question was presented that, are you going to wait until inflation is back down to the 2% target to start cutting interest rates? And the Fed chair said exclusively and explicitly, no, that's not the case. We may indeed cut before we reach that 2% target, but we want to make sure that we have all of the supporting evidence necessary that shows us that inflation is indeed going to come back down to the 2% target before we cut rates. So if you think about the FOMC meeting schedule, we just had the FOMC meeting last week. We're going to have another one in March. We probably will not get a rate cut. And then maybe by the middle of the year, we will get our first cut. Probably if we do, it's going to be in the form of maybe a 25 basis point cut. Now, this is a really good resource for everybody. We talked about this before, but I think everybody should at least head over and save this website. Okay, so this is the CMEgroup.com. This is the CME Group Fed Watch Tool. So it gives you the likelihood and the probability of a rate cut at each one of the meetings. So currently right now it shows the likelihood in December 2024, so at the end of the year, there's a 35.2% chance or likelihood that the Fed funds rate is going to be in a target range of 4% to 4.25%. Now that would signify about 100 basis points worth of cuts. I don't know if that's going to happen. We'll talk about it. We'll see. Moving on from that, everybody, today was a big day, okay? We oftentimes talk about leading economic indicators when we are structuring our systematic framework for investing. What we want to do is we want to look at a couple different set of indicators. We want to look at leading economic indicators. We want to look at coincident economic indicators, and then we also want to look at lagging economic indicators. So the Institute for Supply Management, on the first business day of every single month, they release their manufacturing PMIs, or the manufacturing ISM report on business. So we did just get that out, and the manufacturing PMI increased about 2% to 49.1. Now this is, in my view, the most important leading economic indicator that we could look at. So if you want to follow along on tonight's live stream, if you type !ISM in the chat. So again, !ISM, it's going to take you to the Institute for Supply Management's website, and it will give you the primary source of the PMI report. Now, if you look at the last 12 months, we had an average PMI of about 47.2, with a high being 49.1, which we just got this month, and then the low being 46.4. So if you notice a trend here, and it's better if you plot this in Microsoft Excel, you could actually see the business cycle in real time. Now, for those of you who are unfamiliar with the ISM PMI report, essentially a reading above 50 signals that the manufacturing sector of the US economy is growing or expanding, and a reading below 50 signals contraction. But that's not necessarily the appropriate way we should interpret this report. So, on tonight's live stream, we're going to be doing a deep dive into the ISM manufacturing report on business. We're going to do a deep dive in how we should be interpreting this data and how can we project it to try to predict GDP growth, and thus what is the correlation there between S&P 500 and stock market returns. The last thing I'll say before we get started, this is the most important section of the report. Okay, so again, if you type !ISM in the chat, scroll down about a third of the way on the page, and it is what are the respondents saying. So they survey essentially managers, big managers and CEOs of manufacturing organizations in all of these different sectors, and they make a statement. So the first statement here, which is quite interesting from Chemical Products, it says the start of 2024 looks good. Sales are above expectations and costs are mostly stable. A few commodities are up in cost due to supply shortages. Many previous short commodity market positions have corrected themselves. There is a short-term increase in the cost of international freight, and we could also read what the other manufacturing sectors are saying, and everything is pretty positive with the exception of a few. But again, we'll do a deep dive later tonight. Okay, guys. I would say last but not least, I did send out our free investing newsletter last Thursday. So if you want to receive our free research piece that we publish on our Substack every other Thursday after the market closes, go ahead and scan the QR code on your screen or type !news, NEWS in the chat, and the Nightbot will drop the link to our Substack. It's a great piece of information. We talked about AI, how artificial intelligence is going to revolutionize the global economy. Is it real? Does it have staying power? And we did a deep dive into a few select AI stocks. So go ahead, scan the QR code on your screen, punch in your email, and you will receive all of our equity research in perpetuity forever, as well as a 2-year backlog of all of our research. All right, I'm gonna go ahead and close the laptop. I'll say hello to everybody in the chat, and we will get started on the live stream. Thank you all for joining tonight. So I'm gonna try to do my best, everybody, to stay close to Midtown Manhattan as I possibly can inside, because it is very, very windy. We're reporting live very close to New York City's iconic Billionaires Row. We have the Trump Tower to the left and 432 Park Avenue just across the way over on Madison Avenue. So Haps is here. What's up? Says howdy, good night. Thanks so much. Matthew M says hope you all had a great day. Thank you, thank you. WH7 is in the chat, says hello. Thanks so much. Sally is joining us. I see Estelle. Surfboard is here. Hey, long time no see. Surfboard. Hopefully you're having a great start to 2024. Nina says, Tom, I read earlier today that the Fed lowered interest rates 2x, possibly before summer. What is your view? You're saying that they may lower interest rates by 2% by summer? I'm not too sure. Or are you talking about they may cut rates 2 times before summer gets here? I think either or. What do you guys think? I'm assuming everybody saw the 60 Minutes interview with Federal Reserve Chairman Jerome Powell. And, you know, I thought it was a good interview. I think Mr. Powell was being very direct. And he said it himself that inflation at 2% isn't the deciding factor of him lowering or cutting interest rates. So we do not have to wait until inflation gets down to that 2% target in order for us to see a rate cut. But he essentially pretty much ruled out a cut at the next FOMC meeting, which is going to be in March. But we'll talk more about that, absolutely. Sunshine NYC is here. What's going on? I see Jonathan from Florida. Limitless NYC. Let's see who else we have. Lance, what's up? Faith, Al Baker, Carol Reevy. JC, Robert Bankers, what's up? Alfonso S, Chris B. Daryl says, hey Tom, good evening from Chicago, Illinois. What's up, Daryl? Welcome to New York City on this very cold, windy, and blustery night. So I guess we'll jump right into it since we're talking about the Federal Reserve a lot. I guess we'll start there. Now, at this point, I think it's a little bit of analysis paralysis, in my view. To give you guys an idea, that's how windy it is tonight. I mean, it's going to be over 25-mile-an-hour wind gusts here, so apologies if the microphone is just all wind tonight. But at this point, I think it's a little bit of analysis paralysis. And I'll sort of give my reasons why. Even if we get a rate cut of 25 basis points in March, right, or even over the summer, I mean, is that really going to do much? Probably not. I mean, these interest rate cuts or rate hikes have very lagged effects on the economy. There was a really good interview with the CEO of Citadel Securities, Ken Griffin, and he was talking about exactly that. Once the Fed starts to raise interest rates, it takes, on average, 16 to 20 months for any type of material impact to hit the market, to sort of make its way through the economy. So, 25 basis points worth of cuts isn't, going to be a big, deciding factor. And it's a good topic of conversation tonight because we just got the Institute for Supply Management PMI number, and that has to deal with a lot of the manufacturing sector in the United States, which makes up about 20% of the entire U.S. economy. So I'm not a big business leader, right? I'm not a CEO of a company, but if I was, and I'm making decisions on whether to buy new equipment, to hire new employees, make a big capital investment, I think what I would be looking for in this environment is just stability. So we know that the Fed is probably not going to raise interest rates at all, right? I think the top in the hiking cycle has been put in. So if you are, a big corporate executive and you're making a decision whether to take on debt to start a new project, buy a new business, I think we're pretty much all on the same page that money is not going to get more expensive. Does that make sense? So long as it doesn't get more expensive, corporations will be able to more accurately account for their business decisions in this environment. Because if anything, money is just going to get less expensive. Maybe not that quick and maybe not that by that much, but at least, as they're making budgets for the year and, thinking about moving forward on new projects, at least they'll know that there's not going to be any curveballs where the Federal Reserve is going to hike interest rates. Anybody have any thoughts on that? That's sort of where my head's at. This is 432 Park Avenue. This is one of the most luxurious buildings in New York City. This is the Harry Maclow building. Nina says, agree, Tom, stability should be a priority. Yeah, for sure. For sure. Good to see you, Nina. Vivian Francesca says hello, Tom and everybody. What's up, Vivian? I see Al Baker and Sabrina Fair. What's up? Now, speaking of Ken Griffin and Citadel, this is 425 Park. Look at that. This is the temporary headquarters of Citadel Securities. Sharon is here this evening. What's up, Sharon? Good to see you. We're standing right on Park Avenue looking down towards the MetLife building, as well as Grand Central Station. Pretty cool. Now, in terms of the market, last week the S&P 500 closed at yet again a new, fresh, all-time record high. And today there was some pretty nice follow-through in a couple of the leading stocks. And we just sort of did a deep dive into, a lot of those TMLs, your true market leaders. And one of the things that we discussed is, as we emerge from the bear market to the bull market, the raging bull market in which we're in, I think we should all be paying very, very close attention to the stocks that are already up and out. Does that make sense? So pay attention to the stocks or the companies that are already making new 52-week highs and new all-time record highs. There's been many, many studies done on this, and there's almost a 90% certainty that the first stocks to break out and start the cycle will be your leaders. This is the Aston Martin showroom. This is a pretty cool shade of blue here on this car. Hey Troy, what's up? Good to see you. Hey, hang with Mark Mom, what's up? It's great to be here for another stream. Yeah, hang with Mark Mom. We were just talking about, we're gonna do a deep dive into the ISM PMI report, which is turning up, which is great. Yeah, John Sunderland says like in video. Yeah, and it was interesting because one of my good friends sent me a video of an interview. Bloomberg was interviewing one of the greatest stock market operators of all time, at least of our generation, right? Stanley Druckenmiller. And he was talking about artificial intelligence and a lot of the things that we discussed in the stream. And he said the following. Stan Druckenmiller said that if the promise of artificial intelligence is actually what they say, right? So all the AI hype that we hear about in quarterly earnings reports and all the AI hype that we hear from the big CEOs and the executives and all the experts, right? Assuming that all of that is true, I don't think I could walk down 57th Street. It's like a wind tunnel down there. We'll try to go to the other side. Assuming all that is true, this is going to be a secular bull market that doesn't just last for 10 weeks, okay? It could last for 3-4 years. And I'm going to include this interview in the next newsletter because this is exactly what we've been talking about. And if you read the last newsletter when we were discussing artificial intelligence, we were kind of debating, right? We had an internal debate on the newsletter to say, okay, Wall Street has a very bifurcated narrative as it relates to artificial intelligence. Is this going to be another, bubble, okay, to the likes of cannabis? I'm sure if, anybody is involved in the financial markets, you remember very vividly 2018 with the marijuana stocks. Okay, I'm sure we all remember that. I remember it very, very vividly. All of this garbage, right? Companies with no earnings, almost no sales. We're going to the stratosphere. I mean, every day on CNBC, you would turn on the news and they were just talking about the next marijuana stock, the next weed stock. I'm not sure if anybody remembers that. Anybody in the chat remember the marijuana sort of stock boom craze? And there's many analysts right now on Wall Street that are comparing this new AI craze to exactly that. the marijuana boom, as well as the 3D printing boom. You know, I remember going back into the archives when I was in college and looking at some of these equity research reports, and some analysts on Wall Street were writing these really detailed theses about how they believe that 3D printers will be in every single home across the United States and the world. Anybody remember that? The narrative was that 3D printing is going to be the next thing. There's going to be a 3D printer in every single home in America, and it's going to be a multi-billion dollar and even $1 trillion TAM, total addressable market. Well, guess what? It never materialized. What materialized was a big boom and bust in a lot of these stocks. So is it appropriate, boys and girls, friends watching the live stream, is it appropriate to make the comparison of this AI hype to the likes of the cannabis boom and the 3D printing boom? Or does AI have actual staying power? I don't know. If you want to know my thoughts, you can check us out in the newsletter. John Sunderland says, I remember when blockchain was a big fad. It still is. You know, it still is. Speaking of Bitcoin and blockchain, we just got approved for the spot Bitcoin ETF. Hang with Mark Mom says, Tom, we love our 3D printers. Great hobby. Now, I remember when I was in high school, I took all of these classes called AutoCAD. Anybody remember those? So AutoCAD is like a software where you could build cool stuff, and then you could send it to the 3D printer to build it. It's kind of interesting. Troy Atman says, I read they are making drone parts with 3D printers in Ukraine to fight Russia. That's crazy. They also make 3D printed guns. I think the NYPD is having a big problem with the 3D printed guns. Joe Driver, what's up? Says, hello, Tom team. How are you? Tom, market is getting ahead of itself. The Fed news of cuts. Yeah, we definitely talked about that, particularly after the 60 Minutes interview with the Fed chair. Absolutely. All right, let me get a couple more of these comments in. Theo says no comparison. I think I'm in that camp. Theo as well. I concur. Troy Davenport says, I remember the Toronto Money Show. At the time was like marijuana convention. Oh, you met Gene Simmons plugging his company? Yeah, I mean, it was all nonsense. Now, if we want to bring it back to reality, one of the ways we can most easily decipher if something is a big bubble or not is look at the earnings. Just focus on the earnings. So earnings, as well as the IPO market, so the initial public offering market. And so far, we do not have any pure play artificial intelligence IPOs. Okay, and this is something we also wrote about in the newsletter. I think it'd be helpful if you guys want to follow along with this. If you scan the QR code on your screen and punch in your email, it's going to take you to the latest research piece that we sent out to everybody on Thursday. And essentially what we were talking about is it's very possible that this trend in artificial intelligence is just getting started. As we're standing outside of the Trump Tower, the residences at 721 Fifth Avenue. Because usually what happens when you have a big secular trend is you also have pure play companies cooperating with the technology, and you have them coming public on the exchanges, right? Same thing with the 3D printing boom, same thing with the tech and telecom bust. You had all these .com stocks coming public, and everybody was just buying stocks if they had the name .com in it, right? Same thing with cannabis. There was a new cannabis IPO every day. We haven't really seen that with artificial intelligence yet. If anything, the IPO markets have been absolutely shut off, right? Since 2021, the IPO market has been absolutely closed for business, for reasons which we will discuss. So this move may just actually be getting started, should the fundamentals cooperate here. Alley Stars, Apple Vision Pro, is going to feed into AI for sure. I would concur. And I was rather impressed with the overall presentation of the Vision Pro, which we may check out again tonight since it's so cold. But yeah, if you guys want to check that out, just scan the QR code on your screen and you could receive all of our research every other Thursday. But for now, let's tuck inside to the Trump Tower because it is brutal out here. Actually, I think it's closed. That's all right. We'll go into the Apple store. This is the Tiffany building here. We're coming up on East 57th Street, New York City's Billionaires Row, right on Fifth Avenue. All right, let's cross here for a moment. How windy it is. Oh my gosh. I was looking at the weather report. It said it was going to be 25-mile-an-hour winds tonight. Let's go inside and take cover for a minute, and we'll continue our conversation. Todd Smith, do you recommend crypto? I don't recommend anything. I cannot recommend anything. Do I personally own some crypto? Like Bitcoin? Yes. But I can't recommend anybody do anything. Unfortunately, my God. It is brutal outside in New York. Jeez. Okay, so we are now in the Apple Store again. We'll quickly do a walk around. Now, if you remember last night's live stream, we were checking out the Vision Pro, and it seemed like there was actually a lot of customers purchasing and trying out the new device. So we will see how many customers there are this time. Al Baker says, Tom, do you have Ethereum? I do not. I used to own Ethereum back in college, but I made the decision not to own it anymore. For various reasons. So you can see everybody orienting their Vision Pro devices. It actually looks like they're still making a lot of sales. So I'm assuming if you purchase, you could sit with an Apple employee and they could help you orient the device to your liking. There's about 1, 2, 3, 4, 5, 6, 7 8, 9, 10, 11, 12, 13, 14. About 15 customers. And last night we saw about 20. And this is almost 10 o'clock at night, so the demand still seems to be pretty robust too. Now, only in New York City are you going to see an Apple store that is pretty much completely packed at 10 o'clock at night. All right, let's head up and out by the Sherry Netherland Hotel. Hey, Lance says, hey Tom, can you try one on? I only think you can if you're gonna purchase one. But I'm just astonished with all the customers. I think these are $3,500 each, and people seem to be buying them. Now, the original estimate of 200,000 sales, there was many analysts on Wall Street estimated that they would sell about 200,000 units. They've since raised that to about 400,000 and 1 million units total in 2025. I think it's going to be double that. If I had to guess, and this is my opinion, I think they'll sell 2 million units in 2025. I think 1 million is very low. I mean, all the iPhone launches that I've seen in my history being here in New York City, it's like radio silence, it's dead. This is a new product, this is a Gen 1 product, and to see this many people here, right? It was packed yesterday at 10 o'clock at night, and it's packed here again at 10 o'clock at night with people buying this thing. So that is, in my opinion, my view, very bullish. But I don't know, we sort of talked about this yesterday. What do you guys think? Do you think this Vision Pro is going to be a big passing fad, or do you think it has staying power? What are your thoughts as we head back out into the frozen tundra that is New York City? But if you guys enjoyed that walking tour of the Apple Store and a behind the scenes look at the Vision Pro, feel free to leave a like on the video and click the subscribe button if you're new. We do these streams every night starting at 8:30 p.m. So shifting gears here, this building is 5 East 59th Street. This just sold at auction for about $23 million. This was the old Playboy Club. And it's an amazing piece of real estate right next to the Sherry Netherland Hotel. It went into foreclosure. The previous owner had a little bit of financial trouble. It was about $85 million worth of bad debt on this property. It went into foreclosure and sold at the end of January. So congratulations to the buyers. We were actually bidding for that building, but we did not get the deal, unfortunately. So, all right, this is the Plaza Hotel. Looks beautiful. Yeah, Troy says wait for the second or third generation. I would agree. I would agree, for sure. Vivian says, are they heavy to wear? I think it's a fad. Well, apparently it is very heavy to wear, according to some of the reviews that I've been watching on YouTube, like Casey Neistat's review and everything like that. But I will say this, okay? And I made sort of a post on Twitter or X today, sort of explaining my position. And there was actually a really good viewer, TD, in the comments, sent me some really, really cool and original iMac advertisements. So I think what would be a pretty good exercise, if everybody just goes on Google and just Googles the original advertisements for the newest iMac computer, right? And Google the original advertisements for the iPhone. You know, and sort of just do a little bit of a back test analysis and figure out what people were saying about it, right? Oh, it's going to be a passing fad. I remember watching on the news some of these reruns, you know, on the Today Show of, you know, all of the pundits, you know, the hosts of the Today Show on the day the iPhone launched, they were like laughing about it. They were like, oh, it's never, who's going to buy an iPhone? Nobody wants to carry that thing around in their pocket. That's ridiculous. Who's going to use email? You know, who wants to use that? Nobody's going to want to carry around a phone in their pocket. And now you're pretty much a weirdo if you don't have a phone in your pocket, right? So I think it's important, right, particularly as investors, by the way, as investors, because the job of an investor is to set up the greatest asymmetric risk-reward profile that you can get, right? And usually, at the very, very beginning of potential trends is the greatest opportunity to generate alpha for your portfolio in a very appropriate risk-adjusted approach, right? The greatest risk, or I should say the minimal risk for the greatest amount of reward, right? So you should think, and Surfboard, thank you so much for your $10 donation. Just get a coffee. Thank you, Tom. Thank you so much, Surfboard. I appreciate your generous support. Appreciate it. But, you know, think about it like this. Let's just say this augmented reality and artificial intelligence, let's just say it's everything that everybody's promising, right? What is the upside there? I mean, if you watched the most recent interview with the CEO of AMD, Advanced Micro Devices, she claims that artificial intelligence, augmented reality, and the like could potentially be a $400 billion industry by next year. So if you can invest in that, right, the upside is so high right now. But what if it doesn't work, right? What if, you know, the Vision Pro, augmented reality, AI, and the like is just a big passing fad, and it doesn't really, you know, turn out to be true? Well, then I guess it's not that big of a deal, because all of these companies are still making money hand over fist in all their other segments, like the advertising business, the cloud computing business, and the like. This is just in addition to that, right? This is an add-on. This is an icing on the cake. So even though it may look a little bit goofy and a little bit silly, I think it's appropriate to be slightly optimistic and kind of lean into the innovation, right? In a very calculated way, not just, you know, bombastically leaning into the innovation and saying it's going to be the next greatest thing, but look for clues that confirm that bias, right? A very good piece of advice that I was given by a very, very good hedge fund manager on the street. He says, always look for the news and the data that support the current trend, right? So if the trend of the market is up, right, and corporate earnings are up, you should pay attention and put more weighting on the data that supports the overall general trend of the market. And right now the market is telling us that this is real. It's going to be a big thing, and it's going to have staying power. Theo says, isn't it more sensible to invest in AI infrastructure companies and not pure play, not the retail? Yeah, I mean that's a really great way to go about it. 1000%. Now, what Theo is kind of talking about, which I think she's absolutely spot on here, by the way, I always sort of equate this saying to the gold rush, the California gold rush back in the day. Now, everybody wanted to strike it rich and mine gold in California, right, and become very, very wealthy. But not everybody who went there to mine gold got wealthy. But everybody who would support and supplement the people coming in to mine gold. They got rich, right? Hold on one second. So it can be said that maybe you want to sell shovels and the pickaxes to the new AI entrepreneurs, in a way. So there's going to be thousands upon thousands of small AI, VR, augmented reality startups, but there's only going to be a handful of winners. But if you invest in the technologies, right, or the infrastructure plays, like the big cloud computing companies, all of these semiconductor companies that make the chips to power artificial intelligence, machine learning, things like that, like the NVIDIAs of the world. I mean, look where NVIDIA is right now, cruising through a brand new all-time record high, and that would be an example of buying somebody who's providing the infrastructure for the AI play. That's a really good point. That's a very good point, by the way. Okay, this is the University Club right here. Hey, Evan Weeks, what's up? Says, I think AI is far more of a game changer than VR/AR. Evan Weeks says, though entertainment is the king in America. Very true. Very true. But, you know, I was thinking, could you imagine, right? I mean, if you watch some of those marketing videos of the Apple Vision Pro, can you imagine once Apple launches like an AI chatbot to rival like a ChatGPT and integrates it with the augmented reality, if you will, just kind of project an overlay into your field of view? Now that, I think that's what's going to be game changer, right? Because if you can be wearing these, you know, augmented reality goggles, which is essentially what they are right now. They're like ski goggles. And if you can look at something, and if you're walking down the street and you're like, oh, this building looks really cool, you could say, hey, Siri, you know, what is this building? Tell me a little bit about it. And the AI could say, oh, this is the University Club. It costs X amount of dollars to be a member, and it's open from this to this. And, you know, it can give you a little bit of a, it's almost a fender bender. You know, it can give you a little bit of a, you know, a synopsis on the building. Or there's so many use cases, it's unbelievable. I mean, even some of the medical use cases, right? I mean, think about wearing the Vision Pro, and if you have a small child or something and they have like a skin rash, your Vision Pro could automatically scan the kid's rash and come up with a solution. Hey, this looks like it's eczema. This looks like it's psoriasis. You know, you may need to get a second opinion from a doctor because it may look like it's something more serious. I mean, the possibilities here, I mean, are so endless. You kind of have to, like, what I constantly try to do is force myself to expand my think, to say, what are the possibilities, and try to think of more and more possibilities, right? And I think the possibilities are pretty endless. Evan Weeks' augmented reality could be a big winner in the entertainment industry if they could get the power needs down. That's true. Resolution up and the weight down. I agree. You know, Evan Weeks, in your opinion, right, with as big and as clunky as the Vision Pro is, this is a Generation 1 piece of technology. And that's kind of what gets me so excited about this. And even with the Meta's Quest headset, these are all Generation 1 pieces of technology, right? Is anybody here old enough to remember the first, like, carry-around smartphone? Or not smartphone, I should say carry-around cell phone. Apparently, they were as big as suitcases. I mean, some people would go to work with their phone in a suitcase like this, or like a briefcase. And it looked a little bit ridiculous. But over time, right, they're able to get the size down into a more compactable, usable experience like we have the iPhone right now. So I think over time, right, and I'm not an engineer, but over time, it's very possible that the Vision Pro just looks like sunglasses. Now, maybe that's in 5 years, maybe that's in 10 years. But if I had to bet, I think we'll be looking back on the original Generation 1 Vision Pro in 10 years and be laughing at how clunky it is and how big and how ridiculous it looks. I don't know. Yeah, two-wheel freedoms and those phones were like $3,000 each. CPQ Trainers, his Motorola was the first cell phone. Chris Mills says you carried them in a bag to your car. Yeah, I mean, I think that's kind of the equivalent to the Vision Pro, right? Evan Weeks says, Tom, in order for innovators to be incentivized to iterate on these things and put time, money, and effort into miniaturizing and stylizing them, there has to be a market evident. Very true. It's a very good point. Now, who remembers? Now, Evan's point's a very good point, because that reminds me of the story of the Google Glasses. Now, I'm very familiar with the enterprise version of Google Glass because the last company I worked at, we actually had a direct partnership with Google. So I would meet with some of the, the senior executives who were in charge of pushing sales, right, enterprise sales for the Google Glass, right? They had customers like Boeing, they had customers like KFC, all the big QSR restaurants, and the sales were really never there. It was kind of like a failed project, this Google Glass, and I believe Google made an announcement late last year where they said that they're no longer going to be supporting the software on the Google Glasses. So again, to your point, there has to be a market for it, there has to be users, or else they'll just abandon the project and shutter it down. And that's exactly what happened with the Google Glasses. This is St. Patrick's Cathedral right here. And this is the Cartier store, as well as the old Versace store. Surfboards, says Tom, there's a commercial out right now where they use AI for a football team that is deaf. They have very small visual screens. Wow. Please send that in the chat. I'd love to take a look at that. Eric says, Tom, I'm a software engineer. I'm only excited about the prospect of programming. Oops, lost your comment. Of programming for them. I never want to use them. Well, there you go. Now, what kind of things are you excited about programming for them specifically? Like, as an engineer with your expertise, right? And I don't have an engineering background. You do, so you would know more than me. What would you say you're most excited to develop for these AR/VR headsets? Like, what are some of the use cases? What are some of the products and services that you would build for this? I want to be GMO says, you're probably too young, Tom, but I remember the Game Boy VR. This is actually like generation 20 of AR VR. Oh, for sure. I'm just talking about Gen 1 tech for the specific Vision Pro, right? Like I remember going to the state fair, like the New York State Fair when I was a little kid, and they had huge, ridiculous, like cartoonishly ridiculous looking, augmented reality headsets. So you're 100% right. Maxim, I don't know how to pronounce your name, I'll just call you Max. It says, oh, building things quickly to help people, to be honest, make people's lives easier. I respect that. Not building for entertainment, but to make people's lives better and easier. Well, I think there's a lot of use cases you could do, and I'm sure you're going to be successful in that. So keep us up to date. And if you build anything cool, we would love to know about it. I'd love to know about it. So this is a direct view of St. Patrick's Cathedral. Very beautiful looking church here on New York City's Fifth Avenue, right next to the Olympic Tower. Pretty cool. All right, let me catch up on some of the comments. Jose says first generation of any new product is a prototype. Don't buy it. Yeah. Now, Casey Neistat made a very interesting tweet, and where he said sort of something similar. He said that the people who are buying the Vision Pro right now are mainly the die-hard Apple fanboys and girls, as well as the developers that want to get their hands on the product to see if they can, provide feedback, build services, and build applications for the set. And I think Tim Cook and the team over at Apple kind of realized that. I think they know that this first generation Vision Pro isn't ready yet for the average everyday Apple user, right? Like, my grandmother has a smartphone. My grandmother's not ready yet for this Vision Pro. It just wouldn't work. But that's all right, because it will get there, right? One day it will get there where it'll be ready for the masses, where everybody can use it seamlessly, easily, and it's not going to look so ridiculous. So I think I agree with you 100%. This is 30 Rockefeller Center. Hey, Joe Driver, thank you so much for your support. That's wild. So we now have 42,000 members here. It's kind of nuts. We could fill up about, 1.5 Madison Square Gardens. It's pretty wild. So thank you all for the support. Thank you all for subscribing and joining these live streams each and every night. I think we have a good time. I learn a lot, and we've made some great connections here. So thank you all for 42,000 people. That's kind of wild to think about. Internet's a crazy place. Internet is very, very crazy. This is 270 Park that topped out earlier last year. Now let's walk down to 6th Avenue, or Avenue of the Americas. You'll be able to see Radio City Music Hall, as well as the Dell's Famous. It's one of the best halal food carts in the city. Hey, Tom AK. What's up, Tom? Good to see you. This is the Rainbow Room. JF. I know, it's kind of wild to think. I really do appreciate it though, guys. Thank you for your support. Without the viewers and the chatters, there is really no show. I'd kind of just be walking around talking to myself. Hey, Elliott Wave Review is here. Elliott Wave is a great sort of trading frameworks. Tom, I have a lot of respect for the fact that you never mute your stream when there's music around. Yeah, yeah, I mean, look, do we get copyright strikes? Yeah, we get copyright strikes. That's all right. It's whatever. I appreciate it. I love all the reds and the blues kind of radiating off of the black asphalt here. It's kind of a good contrast. Hey, Rex says, good evening, Tom. When's the last time you've been skateboarding? That's a good question. I actually went skateboarding last week when I was in Miami. Just around my block. You know, if I'm bored, you know, I grab the board and do a couple laps around the neighborhood. I don't really skateboard in New York City anymore, to be honest. And I know it's kind of, you know, sad to say, but it's just too dangerous, I think. And I'm not young anymore. I'm not, you know, as young and as flexible as I was back in the day. So, I mean, if I take one bad spill or get hit by another car in the city, I think the walks in Wall Street days may be over. So, you know, people get older. I'm getting older. I can't afford to be so chaotic anymore. I mean, you know, when I was younger, I would cruise around in and out of cars. You know, I can't afford to do that anymore. I'm getting old, guys. I'm getting old. Getting old. All right, West 50th Street, 6th Avenue. We're gonna walk directly past the Capitol Grill, one of my favorite steakhouses. But my favorite steakhouse in all of New York City is Del Frisco's. Del Frisco's is a great time. It may not have the best food, but I think it has the best environment and the best atmosphere. It's right over here, right there. Great spot. Oh, someone's asking about the David Letterman show. So yeah, I mean, we may walk past that theater right now. It's all the way up and to the left. It's on Broadway. And I believe right now it is the Colbert. I believe Stephen Colbert took over for Letterman. A lot of people don't like Stephen Colbert. I think he's funny. At least I think that's Colbert is there. I don't know. We'll check it out. We'll walk over there and see. JC's Tom, when was the last time I went to a Broadway show? You know, I don't know if the Rockettes counts as a Broadway show, does it? If it does, this past holiday for Christmas, I went to see the Radio City Rockettes, which was an amazing experience, by the way. If anybody next year, right, or this year, 2024 is planning on visiting New York City during the holidays, That I think that is a must see, is the Rockettes Christmas Spectacular at Radio City Music Hall. Amazing. This is the Nürburger Berman. This is a big asset manager. I have a good friend that works there. Hey Matthews, it's time you should go to see Back to the Future Broadway show. It was great. Let me take a screenshot of that. Back to the Future Broadway show. Okay, I'll have to check it out. So we're heading up towards New York City's Billionaires Row. Now that we're smack dab in the heart of Midtown, it's a little bit less windy. Kind of have the buildings blocking us. Evan Weeks, Tom, the last time I was in New York City, we went to Ocean Prime on West 52nd Street. It was an amazing experience. You know, I don't think I've ever been there. I will have to also take a screenshot of that. Ocean Prime on West 52nd. I'll add it to the list. Thank you, sir. Yeah, I mean, check out Del Frisco's. Central location. It's 2 stories. You can sit upstairs. If there's availability upstairs, just ask to sit upstairs. It's very nice. Great views of Rockefeller Center, Radio City Music Hall, and the like. All right, guys, this is 53 West 53rd Street. This is technically one of the Billionaires Row buildings, but it is obviously not on 57th Street. But it has all of the Billionaires Row style amenities that you can imagine, from the saltwater pools, from the concierge. I think it has a basketball court, it has a gym, multiple gyms, and it has, I think, 24/7 room service too, which is crazy. Same thing as 157. Hey, Andre Brown, what's up? Says, hey everybody, long time no see. Andre, Happy New Year. What's up? Thanks for joining us. We were just talking about AI, Vision Pro. I feel like we've been hammering on that subject, but it's a big topic and it's a big discussion for debate. But yeah, Andre Brown, it's a pleasure. West 54th Street. To the left, this is the Alliance Bernstein building, but there is a very major hedge fund here called Fortress Investments. And, you know, kind of shifting gears to the cryptocurrency topic, because that's big now in the financial markets, with the first ever spot Bitcoin ETF being approved by the Securities and Exchange Commission. There was a very famous PM or portfolio manager at Fortress. His name was Mike Novogratz, and he left Fortress to start his own company. It's called Galaxy Digital. And essentially, from what I understand, Galaxy Digital helps institutional investors and clients onboard into the cryptocurrency ecosystem, if you will. So that is his new venture. And even prior to that, I believe he was a helicopter pilot in Marines. And then once he got out of the military, he joined Goldman Sachs, and he rose to the ranks to becoming a partner at the firm, where they took Goldman Sachs public. So you can imagine the kind of payday he had. I know, JC says the skyscrapers kind of look like the DNA profile at night. I know, Troy says no kitchen needed with 24-hour room service. Just need tens of millions to get in. Yeah, I mean, I was actually previewing a apartment in Central Park Tower for one of my friends who got a really nice listing there. And in some of those really expensive units, they actually have 2 kitchens for if you have staff. Those are, crazy conversations to have with clients. But the higher you move up in the sort of price range in New York City, those are the kind of conversations you need to be well versed in having, right? Making recommendations on private chefs, personal trainers that can come in, and even private security, right? I can't dive too much into detail, but we're working this really interesting deal now where essentially the only way the deal is going to come to fruition is if we can include like a private security package, which is just like wild and yeah, crazy. Anyway, I wanted to run through some numbers with all of you, if I may. Surfboards is Tom. Do you like Keen's Steakhouse? Love Keen's Steakhouse. Keen's is very good, but I don't like it better than Del Frisco's. I think Del Frisco's is a more fun environment. But to answer your question, yes, I love Keen's Steakhouse, 100%. We'll quickly blow through these numbers and then we'll have a good time. So everybody, we kind of discussed about how, is the AI going to be a passing fad? Is this a big bubble? There's a lot of analysts on Wall Street that says, stocks are at nosebleed valuations and, everything is upside down, backwards, and sideways. But I'd just like to remind you, okay, last week we had Meta reporting earnings, we had Microsoft, we had Apple, and we had Alphabet. So let's just quickly talk about net income, which is essentially profitability. Let me just cross the street here. There's always this blind spot. But we'll talk about the net income or the profitability in the quarters, okay? So not the year, but just in the most recent quarter, which is kind of astonishing. So Meta, we'll start with our good friend Mark Zuckerberg. Last quarter alone, okay? Last quarter alone, Meta tripled its profitability. So net income tripled to $14.6 billion. One company in one quarter made $14.6 billion. We'll go over to our good friends at Microsoft. They reported net income or profitability of $21.87 billion. Okay, so this isn't, woozy, 2000 .com bubble. These companies, guys and girls, are making over $20 billion a quarter, okay? We'll move on to our good friends at Apple, right? Tim Cook and all of his buddies. We were just talking about their new product launch, the Vision Pro. Apple brought in $33.92 billion last quarter. I mean, these are like cartoon numbers, guys. This is insane. I mean, these companies are making money hand over fist. It's ridiculous. And not only that, Apple returned about $27 billion to shareholders in the form of dividends and share repurchase programs last quarter alone. So these are massive, massive businesses that are extremely profitable. So, yeah, TCAL says tax the rich. These numbers are crazy, and I think it's important to kind of bring it back to that level to say, look, these aren't unprofitable companies we're talking about. They're making billions and billions and billions of dollars every quarter, every 3 months. They're ringing the register to the tune of 17 billion, 20 billion. So it's important, right, that when we kind of have these debates, when we talk about our valuations getting stretched, is, this just another bubble? And is it going to end the same as 2008 and everything's going to come crashing down? Markets go through corrections, okay? The stock market goes up, the stock market goes down, but over the long term, okay, assuming companies continue to churn out profits and earnings, the market recovers, right? And it goes back up. Assuming earnings growth continues. And at the big Magnificent Seven companies, I mean, earnings growth, it's screaming here. This is the Russian tea room. Oh, we forgot about Google. Apologize. So ticker symbol GOOGL. Last quarter alone, they made net income of $20.7 billion. $20.7 billion. So there's some context. So what we're looking at right now, everybody, is 157. So this building, with this very cool kind of wavy awning here, this is the Park Hyatt Hotel. And the Park Hyatt Hotel is in the first building ever constructed right here on New York City's Billionaires Row. Okay? So if you are a resident, that means if you own or rent a unit right here at 157, not only do you get to have amazing amenities like a saltwater swimming pool, like a private library, a private aquarium, a private gym, but you also get to share in all of the amenities that come with the 5-star hotel Park Hyatt right here, which is 24/7, 365 room service. You have a 24/7 bar if you want a mixologist to make you a drink. It's an unreal building. And it's right here at 157. So this door is where you go if you own a unit or if you rent. And right here is the 5-star hotel. Kind of crazy. Let's see what's coming down here. And you're right across the street from the Carnegie Hall too. Now, knowing that 157 is the first building ever constructed on Billionaires Row, the developer is Extel, E-X-T-E-L-L. The CEO and founder is Gary Burnett. And a few years later, he actually went on to one-up himself and build an even taller and even better and more luxurious building right over here called Central Park Tower, 217 West 57th Street. Now we have a little bit of breaking news there. A broker from Douglas Elliman, who is the same broker that I work for, sold the duplex at Central Park Tower for $149,500,000 just for that one apartment. So the deal sold and closed about 2 weeks ago. The final sale price, I believe, was $149,500,000. I mean, think about those crazy, crazy numbers. There's always a bull market somewhere, and apparently it's at the top of Central Park Tower. All right, I got to plug in my phone. Give me a second. Okay, I think we are good. So there must be some show coming out of Carnegie Hall. There's tons and tons of people either waiting to get in or just coming out. So it looks beautiful. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video. And click the subscribe button if you're new. We do these live streams every single night starting at 8:30 p.m. And I'd love to have you guys join us here. Oh, it appears that this show is sold out. Wednesday, February 7th at 8 p.m. at the Stern Auditorium. A piano player. Very cool. Let's see who it is, just out of curiosity. It says it is sold out. He's an Icelandic pianist. Wow. The tickets are only $50. That's actually not bad. I thought they were going to be like $150. $50 tickets at Carnegie Hall. I'd do that. I do that all day, every day. That's a pretty good deal. All right, so we're crossing 7th Avenue here. You can see all the way up to Alwyn Court. Joel PM's that kind of money would afford someone an entire building. Flatiron, not much more. Yeah. This is an awesome shot here, guys. Look at this. So this is looking all the way down 7th Avenue, and you can see directly into Times Square. And you can even see the ball at the top of 1 Times Square. It's pretty cool. You could have a direct view all the way down. Hey, Brad's Brains, it's Tom. Did you see Palantir reported after hours? The year-over-year sales increased 19%. It's up big after hours. You know, Brad, I honestly didn't see that, but I'm gonna make sure I do a deep dive in that earnings report. What about EPS? What about the earnings power? Was EPS to earnings up year over year, quarter over quarter? Now, hopefully, Palantir will start to clear some of its overhead supply. But I think that stock is a laggard. You know, it's failed to break out. It's failed to come out. All of the leaders, in my opinion, are already out into new all-time record highs. Hey, Carol H says, I can't wait to visit New York City again. Well, Carol, maybe you don't visit anytime soon. Maybe wait until the summer. I think you're much better off down in Miami, Florida, at least for the duration of the winter, right? I mean, chill down there in February, March, April, and then maybe come back in May for Memorial Day. I mean, that's the best of both worlds. Being able to, you know, hang out in Miami, Florida during the winters, and then coming all the way back to New York City in the summer. I mean, that's the life right there. But Carol, looking forward to your return. All right, everybody, this right here is 217 West 57th Street. This is, excuse me, this is the building of buildings. This is Central Park Tower. This is the second Extel development right here on New York City's Billionaires Row. You can see this crowd coming out here. And we just recently had a record-breaking sale all the way at the top. So if you could see all the way to the top of the building, the duplex that sits atop of Central Park Tower just sold and closed for $149,500,000. An incredible sale just below the triplex atop of the building. Insane numbers that New York City tends to be pulling for the ultra luxury real estate. It's pretty insane. Scooters' revenue was up $5.4 million. Hang with Mark Moms' Palantir was $17.08. Down at closing tonight, $16.72. Interesting. Peter's foreign buyer or domestic. I do not know. I do not know, to be quite honest. But we'll make this, actually, no, we'll make a right. We'll make a right. We'll go to Columbus Circle tonight. We'll check out the Trump International Hotel and Tower. Sarah Cape Cod says, do you know who the buyer is? I don't know who the buyer is, but the sales agent who sold Central Park Tower, the duplex, is on the Eklund Gomes team, which is a very, very good team at Douglas Elliman. And our team does a lot of business with them. So I am on the Kirsten Jordan team at Douglas Elliman. And we do a lot of business with each other. They're a great team. Frederick and John Gomes have built amazing, amazing businesses. Yeah, Jay, the 107th and 108th floors. It's incredible, incredible residence. An amazing tower. Now, the best-selling building on Billionaires Row is actually the one with the gold top. This is 220 Central Park South, and that was developed by Vornado. If you guys tuned into the live stream last night, we did a complete tour of the brand new Penn 2 project, and that is the revitalization of Penn Station. And that's Steve Roth's company, Vornado, and they also did 220 Central Park South. So pretty cool. But yeah, if anybody's ever seen the TV show $1 Million Listing New York, the first female broker to be cast on that show, $1 Million Listing, that's who I work for. That is my boss, Kirsten Jordan. Amazing, amazing, amazing team. We had an amazing month in January, thank God. But quickly make a lap around the Deutsche Bank Center. Right here, Columbus Circle. Looking all the way up to 1 Central Park West. Now, this is the Trump International Hotel and Tower, but Donald Trump also used to own the Plaza Hotel, and that address is 1 Central Park South. So, I mean, imagine having 1 Central Park West and 1 Central Park South. I mean, incredibly iconic addresses. Buttercup G76 as I watch $1 Million Listing. Oh, cool. Awesome. Yeah. So I work for Kirsten Jordan as well as her husband. Great people, very successful people. And if anybody's looking to move to New York City, buy or sell, and if you want to work together, just send me an email. I'd be more than happy to assist in any way I can. All right, let's take one lap around Columbus Circle. And maybe if it's still open, we'll go inside the Deutsche Bank Center. This actually used to be called the Time Warner Center. Way back in the day, Related Group built this property. And many people didn't think it was going to sell well because they were like, okay, you know, 9/11, 2 towers. The Related Group designed this with 2 distinct towers. They thought it was going to be like a bad omen. And it wasn't going to sell. It was one of the best-selling buildings in New York at the time. The Mandarin Oriental Hotel is in here. And obviously it was previously called the AOL Time Warner Center. Now Deutsche Bank, which is a big bulge bracket investment bank, German bank, they moved or relocated from 60 Wall Street all the way up here. So 60 Wall Street, I believe, is going to be a big condo conversion project. So office to condo conversion, which is pretty rudimentary for down there in Lower Manhattan. Lower Manhattan has some of the highest office vacancy rates in the city at 14%. So a lot of the older sort of Class B, Class C office towers are being converted to condos, one of which being the One Wall Street project that was put on by Harry Maclow. Here's another view of Central Park Tower and 220 Central Park South. Travelistas, I need to email you. Yeah, I mean, if you want to send me an email, or just type !Thomas, THOMAS in the chat, !Thomas, THOMAS in the chat. It'll bring you to my bio page. So it has my resume on there, everything I've done. So if you want to work with us, just type !Thomas, and that'll drop my entire bio, our About Me page. Now this is the Jazz Club at Lincoln Center. West 60th Street. We'll make this left just so you can see the main entryway to the one and only Mandarin Oriental, which is a really, really nice hotel, 5-star hotel. It's also, there's one in Miami that we walk past all the time on Brickell Key. Hey, Michael Wooten, thanks so much for joining us tonight. I will see you tomorrow. These are all the tenants. And you have Mandarin Oriental. This is the main entrance to the Mandarin Oriental. Now this is a new development too, but it's only going to be rentals, unfortunately. Oops. Now the big skinny building is the Steinway Tower. It's one of the skinniest residential apartment buildings in the entire world. Now, I think we'll sort of go into a deep dive tomorrow of the Institute for Supply Management PMI report. We briefly talked about it at the very beginning of the live stream, but I think it was just too windy tonight to really go into detail. But when we're developing our systematic framework for investing, what we want to do is we want to really look for three things. We want to look at leading economic indicators. We want to look at coincident economic indicators. And then we want to look at lagging economic indicators. Now, the first business day of every single month, the Institute for Supply Management releases the manufacturing PMIs. And essentially, if you think about how the economy in the United States is broken down, 20% of the US economy is manufacturing. So it's very important to understand the current state of the manufacturing sector in the United States. So if you type exclamation point ISM in the chat, once again, exclamation point ISM in the chat, the Nightbot will drop the link to the ISM PMI report that just came out. Now, we recorded a reading of 49.1%. That's up 2 percentage points from last month's number. That is a huge increase. Now, if you want to understand how to read the report, generally speaking, a reading over 50 signals expansion in the manufacturing sector of the US economy, and a reading below 50 signals contraction. But that's not really how we should be thinking about it. It's more so the trajectory of those PMIs, right? So it's more important, not the actual number, but where the PMIs are heading. So if you see, the PMIs at 45, and then the next month it's at 46, the following month it's at 50, right? The trajectory of coming from contracting into growth is the most important. Now, there's so much data on this that the manufacturing sector usually leads the GDP number. So what we want to do, again, going back to leading economic indicators, we want to try to see what these executives in the manufacturing sector are saying. And if you scroll down about a third of the way down the page, it says, what are the respondents saying? And they actually tell you the outlook on the business. They say, are new orders growing? Are inventories growing? Where are cancellations? And all of this really good data. And I would say that the data point that really stood out to me is new orders are now growing once again from contraction. So the category of new orders was in contraction consecutively, month over month over month, and now we've just turned positive, and the PMIs, I think, have now had a 6-month consecutive increase from a trough of about 46 all the way up to 49. So there's really no surprise why the general market has also been following the PMIs, because generally speaking, again, manufacturing will lead GDP growth, and if GDP is expanding, there's a 70% chance that the S&P 500 will be positive. So as traders and portfolio managers, right, it's all about probabilities. So if GDP is going to be positive, that means 70% of the time, the general market is going to be up. So do you think you should have your portfolio position net short or net long the market when you have a 70% chance of the overall general market being up, right? So it kind of gives you an idea of how professional PMs on the street use all of these different leading economic indicators to establish a directional narrative on the market. And we'll talk about this a lot more. I think it's a lot better to explain this in writing. So next Thursday, I'm going to be doing a deep dive or a breakdown in the Behind the Street newsletter, which is our free financial newsletter that we send out to the group every other Thursday after the market closes. And I'm going to be writing a segment on how we can interpret this data the appropriate way, right? I think that's very, very important. Because if the goal is to manage money yourself, I think it's so critical to be self-sufficient, right? You shouldn't look to people to take tips, stock tips or stock advice. You need to learn how to do things yourself. You need to learn a systematic framework that you can work in perpetuity forever, so then you could be self-sufficient and self-sustaining. So by understanding how to look at these different economic indicators and how to put the pieces together, you're gonna have a much easier time, wrapping your head around these things. So if you wanna join us over there, I just emailed everybody on Thursday, go ahead and scan the QR code on your screen and just punch in your email, and you'll be signed up to receive our free Substack. We publish every other Thursday right as the market closes. But for now, everybody, I'm going to have to call it a night because it is quite cold and I do have an early start. So I want to thank all of you for coming out to the live stream. Thank you for watching Walks on Wall Street. Thank you for subscribing, sharing the show with your friends, and reading the newsletter. So I appreciate all of you. Have a wonderful week, and we will see you right back here tomorrow at 8:30 live from New York City. So hang with Mark Mom, appreciate it. Karina Thompson, CP, appreciate you. Richard Vogel, Penelope, Sabrina Fair, TD, all of our moderators, Touted Tara, Chris B, JC, Travelmista, Abdullah, Muhammad. Who else we got? Troy Davenport. There's always a bull market somewhere. You just need to know where to look. Green Star. You can just scan the QR code or type !news, NEWS, in the chat. Carol H, guys, I gotta go. We'll see you later. Take care.